I am your host Zayed Haji, and today I invite you into a story that most overlook. A story hidden in plain sight within the balance sheets and production lines of one of India's most quietly powerful companies. Amara Raja Energy and Mobility Limited, listed on both the National Stock Exchange (NSE) and Bombay Stock Exchange (BSE), operates in a sector that sits at the very heart of economic continuity: batteries. Without this industry, industrial activity stalls, mobility comes to a halt, and the digital infrastructure we depend upon gradually slips into silence. Yet despite its critical importance, only a handful of companies in India hold the operational depth and market influence that Amara Raja commands. From its publicly available financials, Screener.in, ticker phonology BSE India, it becomes clear that this is more than just a manufacturing business. It is an energy backbone, a strategic pillar that supports everything from basic transportation to advanced technological applications. And more importantly, it is evolving. Mobility is no longer just about vehicles. It's about the transition to advanced lithium energy solutions, sustainable power systems, and resilient infrastructure. In many ways, Amara Raja Energy and Mobility Limited isn't simply following this shift, it's actively shaping it. Stay with me, most will drop off here and miss the real insight. Disclaimer: as business research students and MBA graduates from NMS University, Mumbai, our research, which draws on the Indian Government Budget Report, Indian Economic Survey reports, RBI reports, company annual reports, and online tools such as Screener.in and ticker phonology, is intended only for educational purposes. It is not stock advice or a recommendation to buy, sell, or hold securities. Please do your own research before making any investment decisions. Stay with me until the very end. Most people will drop off in the first few minutes, and they'll miss the key insight you're about to gain. If you find this valuable, please like and subscribe. The majority of listeners never do, but it truly supports the growth of this channel so we can keep sharing high-quality research-based content. Imagine a company whose products silently power the infrastructure of an entire nation, where every call made, every train that moves, every critical data center that stays online is in part made possible by its technology. That company is Amara Raja Batteries Limited, ARBL, a flagship of the Amara Raja Group and a true technological force in India's energy storage landscape. As one of the largest manufacturers of lead-acid batteries for both industrial and automotive use, ARBL doesn't just serve the market, it defines it. With an elite roster of OEM clients and a distribution network that extends to over 50 countries, the company has embedded its power solutions into telecom networks, UPS systems, Indian railways, and across the power, oil and gas sectors. In the domestic market, Amara Raja has become the trusted backbone for virtually every major telecom service provider and critical infrastructure partner, establishing itself not just as a supplier but as a strategic enabler of uninterrupted progress. In the evolution of every powerhouse, there comes a moment when old alliances are released and strategic control is fully reclaimed. And for Amara Raja Energy and Mobility, that moment began with the termination of its long-standing shareholders' agreement with Johnson Controls. It continued in July 2023 when Brookfield Asset Management, previously the second largest stakeholder, exited completely by selling its entire 14% stake to mutual funds and other institutional investors. With external hands stepping back, the reins moved firmly into the grasp of the core promoters. On February 16, 2024, the R.N. Gala Family Private Limited, already at the center of the company's vision, received 1/22/12/864 shares as part of a special arrangement following the merger of Mangal Industries Limited, lifting their ownership to 32.86%. Today, the company's shareholding reflects the confidence of long-term stakeholders, 32.86% held by promoters, 23.84% by FIIs, 14.55% by DIIs, and 28.76% by public investors across 662,428 shareholders. And the momentum doesn't pause there. The company has approved the issuance of 1.22 crore equity shares for the merger of Mangal Industries' plastic division, unlocking backward integration into battery packaging. Simultaneously, the strategic acquisition of Amara Power Systems Limited, now a wholly owned subsidiary since September 29, 2023, positions the group to accelerate its leadership in charging solutions, ensuring that Amara Raja doesn't just participate in the energy transition, it orchestrates it. Every great enterprise has a core engine, and for Amara Raja Energy and Mobility, that engine is built around three strategically aligned business segments. At the center lies its automotive battery division, contributing 68% of FY23 revenue, powering everything from two-wheelers and three-wheelers to passenger vehicles and commercial fleets. As the largest exporter of four-wheeler batteries and the first manufacturer of AGM batteries for two-wheelers in India, the company's leadership is undisputed. Now, through its subsidiary ARCSPL, it is building a 1.5 LTPA lead recycling facility, giving it end-to-end control across the supply chain. The industrial battery division, 30% of FY23 revenue, powers the backbone of India's infrastructure, from telecom networks and railways to solar and UPS systems. It is the market leader in telecom, the first to introduce valve-regulated lead-acid batteries in India, and operates the largest integrated manufacturing valve-regulated lead-acid facility in the country, having even pioneered specialized battery solutions for Indian railways. But the company's most decisive move lies in its new energy and mobility business, 2% of FY23 revenue, where it has already developed India's first 21700 lithium nickel manganese cobalt oxide 811 cylindrical cell, successfully powered an e-bike with in-house 2170 cells, and launched EV charging and energy storage solutions. With the creation of E-Positive Energy Labs, Amara Raja is building a proprietary R&D ecosystem designed exclusively to shape the future of clean mobility. If you leave now, you'll only hear what everyone already knows. The real edge comes at the end. None of this would be possible without one of India's most extensive distribution networks. 23 branches, 39 distribution points, over 500 Amara franchisees, 1,000 Power Zone retail stores, more than 2,000 service hubs, and 1 lakh plus points of sale across India. Already exporting to 50 countries, the company is now advancing into Europe, North America, South America, and deepening its presence across Southeast Asia, West Asia, and Africa, positioning itself not just as a national leader, but a global force in energy and mobility. Amara Raja's operational footprint is rooted in India, with 88% of FY23 revenue generated domestically and 11.92% from exports, yet its influence extends well beyond national borders. From state-of-the-art plants in Tirupati and Chittor, 7 manufacturing facilities in total, the company supplies OEM-grade automotive batteries to industry leaders such as Maruti Suzuki, Tata Motors, Mahindra and Mahindra, Hyundai, Honda, Ford India and Ashok Leyland, while simultaneously exporting to 49 countries across the Indian Ocean rim. In FY23 alone, its top 5 customers contributed over Rs 1,354 crore. To reinforce this dominance, Amara Raja is now deploying a Rs 9,500 crore expansion through ARACT, executed in phases over the next decade. The initial phase includes Rs 400 crore for the lead recycling facility at ARCSPL and up to Rs 1,500 crore in capex over the next 2 to 2.5 years, complemented by its Rs 350 crore annual routine spending. Once complete, the new facilities will meet 30% of the company's total lead requirements. Current manufacturing capacity stands at 19.2 million 4 watts batteries, 30 million 2 watts batteries and 3 billion ampere hour of industrial batteries per year. Although the company lost its 1.8 million unit tubular battery plant in a fire on January 31st, 2023, with FY22 revenue of Rs 700 crore from that unit, the loss of Rs 438.56 crore is fully covered by insurance and reconstruction is already underway, with immediate demand being fulfilled through outsourced production. At the same time, Amara Raja has executed a series of strategic investments to accelerate its shift into new energy, including its stake in Log9, 14.33%, and an investment agreement with Inobat Auto Norway. And through its upcoming Giga Corridor in Individipally, Telangana, backed by a Rs 9,500 crore memorandum of understanding and spanning 262 acres, the company plans to build 16 gigawatt-hour of lithium cell capacity, develop E-positive energy labs, and begin Phase 1 commercialization by FY26. The journey hasn't been without challenges. In 2021, the Andhra Pradesh Pollution Control Board ordered the closure of its Chittor and Tirupati facilities, but the High Court has granted an interim suspension of the order, allowing operations to continue uninterrupted while the matter awaits final resolution. The story of Amara Raja's rise begins in 1997, when sales and order bookings crossed the coveted Rs 100 crore mark, a milestone that marked not just growth but the birth of serious ambition. The company immediately set its sights on backward integration into plastics and undertook a modernization program to expand production from 180,000 to 275,000 batteries per year. Only the serious listeners make it to the last minute. Prove you are one of them. By 1998, Amara Raja had captured the attention of the global industry and entered an equity partnership with Johnson Controls International Public Limited Company USA, strategically opening the door to the SLI automotive battery market. At the same time, it earned approval as a vendor for Mahindra Ford while evaluating a 5 megawatt captive power project to secure uninterrupted energy for its growing operations. In 1999, the company launched its automotive battery division, signing exclusive supply agreements with Ford, General Motors and Mercedes-Benz. Capacity jumped from 1820 lakh ampere hour to 2332 lakh ampere hour, and with Johnson Controls now fully engaged, new products for both original equipment manufacturer OEM and replacement markets were actively developed. The pace intensified in 2000 with the launch of Combat, trademark high-performance UPS batteries, and the introduction of Amara, trademark high-life batteries, into the domestic retail market. The company built an initial network across 5 metros, secured exclusive supply contracts for the Ford Icon and all domestic models of Mercedes-Benz India. By 2001, the OEM customer base had widened to include Ashok Leyland and Mahindra, while the Amara trademark aftermarket network spread to 25 Indian cities. A major private label agreement was signed with MICO Bosch, and new products were announced for the inverter farm and truck segments. Crucially, the government imposed anti-dumping duties on batteries from Korea, China and Japan, a policy that tipped the competitive balance in favor of Amara and other domestic manufacturers. The momentum continued into 2002 with the launch of GenPro trademark maintenance-free VRLA generator starting battery and Brute trademark maintenance-free motive power battery for forklifts, and new OEM relationships with Swaraj Mazda, Telco 407 and Hindustan Motors, Lancer. At the same time, Amara began supplying batteries for AC Delco General Motors under a private label agreement, helped once again by another round of anti-dumping duties on Asian imports. In 2003, the company introduced Quanta trademark UPS batteries, rapidly expanding its share of the industrial battery market. New automotive OEM customers included Fiat Palio, Honda Accord, International Tractors, General Motors, Eicher, and Telco Heavy Vehicles. The domestic aftermarket network grew to 21 states and over 100 franchisees, while export revenue surged nearly 500%, driven by contracts for Comfort Delgro Cabs Singapore and Dubai Transport UAE. By 2004, Quanta trademark volumes were registering 272% year-on-year growth, and the company had become a trusted battery supplier to Eicher Motors, International Tractors, Honda City, GM Optra and Ford Endeavour. Export revenue climbed 147% with fresh accounts in Australia, Kuwait and Tanzania, while the Amara trademark brand began establishing footholds in Sri Lanka, Nepal, the UAE and Singapore. Industrial battery exports expanded into Taiwan, Oman and Ghana. The year 2005 saw a landmark OE relationship with Maruti Udyog Limited, at a time when the company approved expansion of automotive battery capacity from 1.5 million to 2.4 million units, rupees 388 million outlay. Amara began exporting to Japan, China and Greece, simultaneously strengthening its domestic presence through new products like Amara Pro, Go and Fresh, and a growing network of pit stops and active retailers. In 2006, supplies commenced to Hyundai Motor India, and the company remained the exclusive supplier for Maruti Swift and Tata Motors Ace. Export volumes rose 83%, with new markets in Japan, Singapore, Australia, Taiwan, Philippines, UAE, Kuwait and Greece. Automotive capacity was raised to 3.6 million units, while the industrial two-wheeler engine VRLA facility expanded from 20 mm ampere-hour to 29 mm ampere-hour per month. By 2007, Amara increased two-wheeler engine VRLA capacity to 400 million ampere-hour, and automotive output remained at 3.6 million units. A major investment of rupees 2016 million was announced to expand automotive capacity to 5.4 million units, including a new two-wheeler and SVRLA facility in Tirupati. The PowerZone trademark retail format was launched to serve rural markets, and export outreach extended to Afghanistan, Hong Kong and Tanzania. In 2008, the launch of PowerZone trademark stores was coupled with the introduction of a 60-month warranty battery, a first in the Indian automotive market. Installed capacity grew to 3.9 million units, with plans to increase to 4.4 million, alongside expansion to 400 PowerZone trademark outlets and 120 Amara pit stops. By 2009, Amara doubled its large VRLA capacity from 450 to 900 million ampere-hour, began producing small VRLA batteries for commercial and household applications, and entered an agreement with Tata International Limited to market Amara batteries in Africa. The Amara Pro Bike Rider trademark valve-regulated lead-acid battery with a 60-month warranty was launched in the motorcycle aftermarket. The company also reduced battery charging cycle time by 20% and embedded Six Sigma and total productive maintenance was practiced across operations. In 2010, Amara Raja delivered the first hybrid battery for the Mahindra Scorpio, completed a micro-hybrid program for Tata Motors Ace, and entered into a development agreement with Honda Japan to produce motorcycle valve-regulated lead-acid batteries, marking a decisive shift from scale to innovation-led dominance. Don't stop halfway. That's where average understanding ends and real conviction begins. Now, let's walk through the pivotal milestones that shaped Amara Raja's business evolution. In 2011, Amara Raja entered a new phase of expansion, strengthening its distribution network with fresh franchise partnerships and stepping into new markets by resupplying Kuwait, Oman, and Dubai. It began delivering batteries for Tata's newly launched SUV Aria, secured approvals from Cummins and Ford, and even partnered with Bharti Airtel to support its rapidly expanding African telecom network. By 2012, export volumes had doubled. The company intensified its presence across Africa, Sri Lanka, and Bangladesh, deepened its channel with 25 new aqua partners, and invested 1,900 million to expand its medium valve regulated lead-acid product line. The Amara brand accelerated its growth with 34 new franchisees joining its network. In 2013, Amara Raja introduced the Quick Recharge Series (QRS) batteries for telecom towers, a product that immediately gained traction. It capitalized on growing demand by targeting Maruti's Swift and Zaya diesel platforms and Hyundai's Eon. At the same time, it expanded into semi-urban markets and launched Amaron and PowerZone tubular inverter batteries and home UPS systems, increasing both its reach and product depth. The momentum carried into 2014 when the company began a large-scale supplies to two-wheeler OEMs, strengthening its position in the automotive battery market. This was matched by the launch of a new Quanta UPS series, reinforcing its dominance in the IT and banking sectors. In 2015, Amara Raja enhanced efficiency across the large valve regulated lead-acid and medium valve regulated lead-acid facilities and commissioned a new four-wheeler battery plant in Chittor, while also approving investment in a tubular battery plant to meet rising demand in the home UPS segment. By 2016, a new four-wheeler battery plant pushed capacity to 8.25 million units per annum, while the board approved an expansion plan to raise two-wheeler battery capacity from 11 million to 25 million units per year. Export volumes rose 33%, and the new tubular plant began supplying to the market. The year 2017 marked a significant leap. A greenfield two-wheeler battery unit in Chittor introduced advanced technology to reduce lead consumption, and Amara Raja became the exclusive battery supplier for Renault Kwid while securing new accounts with Bajaj and Hero. It also commissioned a 1 million unit tubular battery facility. In 2018, the company entered the motive power segment with Amaron Brute, launched tubular flooded batteries for rural banking, and established a subsidiary in the Middle East to strengthen regional presence. 2019 saw the announcement of another greenfield automotive battery plant with a capacity of 6.5 million units, rupees 700 crores investment, alongside a technology license agreement with Johnson Controls for advanced stamped grid technology, rupees 540 crores. The company received sizable orders from Africa for energy storage systems and formed Amara Raja Batteries Middle East FZE to drive growth across the region. In 2020, commercial operations commenced in Sharjah, with distribution expanding across Africa, the Middle East, and Asia Pacific. Amara Raja supplied the world's largest lead-acid energy storage system, 37.83 megawatt-hour, for African universities and secured an important defense sector order covering 342 sites. By 2021, it was supplying automotive batteries to Schneider, opened 2 additional international pit stops totaling 17, launched a new range of tubular batteries for inverter and e-rickshaw use, and received a license to market Ekdelco, a division of General Motors Technical Center India, in the Indian automotive aftermarket. In 2022, the company entered Nigeria and Indonesia, captured Adani's data center contracts, expanded telecom sites in Andhra Pradesh and Orissa, and formed a joint research center at RM University to develop next-generation lithium-ion technologies. In 2023, the industrial battery division grew 20%, driven by 5G rollouts and strong UPS demand from data centers. Although a fire in the tubular battery unit caused significant damage, insurance recovery efforts were initiated immediately. Meanwhile, the new energy business was transferred to a subsidiary, and substantial investments were made in digital transformation to optimize the supply chain. By 2024, the company evolved once again, investing in a gigafactory for lithium-ion cells, a battery recycling plant in Tamil Nadu, and several technology startups. It deployed AI-driven systems to build a digital backbone for its EV battery business and acquired 100% ownership of Amara Raja Power Systems Limited, integrating EV and industrial charging capabilities. Its UAE, ARBME, and Telangana ARACT subsidiaries posted positive growth, and in a move that reflects the true breadth of its ambitions, the company rebranded itself as Amara Raja Energy and Mobility Limited. 2025 marks the execution phase of Amara Raja's long-term energy strategy. With its 16 gigawatt-hour gigafactory project underway, the company is targeting 16% market share by 2030 and has already secured a major win. Hyundai Motor India will begin using Amaron's Made in India AGM batteries starting Q4 FY25. The business remains India-focused, 88% domestic, 12% export, operating 7 lead-acid plants and 2 new energy facilities, with annual capacities of 55 million automotive LAB units, 2.3 billion ampere-hour industrial LAB, and 2 gigawatt-hour in new energy. Current expansion includes the Telangana Giga Corridor, 16 gigawatt-hour plus 5 gigawatt-hour pack capacity, operational by 2027, a lead recycling plant in Tamil Nadu, Phase 1 started December 24th, and a 1 million unit tubular battery plant in Chittoor, supported by Rs 600-700 crore capex in FY25, rising to Rs 1,000 crore in F26. Stay to the end and ask yourself, did this change the way I think or not? Financials 2013 to 2024. Over the last decade, Amara Raja Energy and Mobility Limited has demonstrated consistent financial expansion. Revenue increased from Rs 2,959 crores in 2013 to Rs 11,260 crores in 2024. Net profit grew from Rs 287 crores to Rs 906 crores over the same period. EPS, earnings per share, rose from Rs 16.79 in 2013 to Rs 49.49 in 2024. The company's balance sheet strengthened significantly. Reserves grew from Rs 1,043 crores in 2013 to Rs 6,750 crores in 2024. Total assets expanded from Rs 1,770 crores to Rs 8,834 crores, reflecting sustained reinvestment and capacity expansion. Focusing only on financial year 2025 FY25 and the trailing 12 months TTM, Amara Raja Energy and Mobility has reached its highest ever revenue base, but the data clearly shows that operational efficiency must now match scale. In FY25, sales reached Rs 12,405 crore, while total expenses rose to Rs 10,771 crore, resulting in an operating profit of Rs 1,634 crore and an operating profit margin OPM of 13%. Other income contributed Rs 199 crore, but higher depreciation, Rs 492 crore, and interest costs, Rs 42 crore, brought profit before tax down to Rs 1,299 crore. After-tax net profit stood at Rs 964 crore, delivering an earnings per share EPS of Rs 52.66 and a dividend payout ratio of 20%. In the trailing 12 months TTM, revenue increased slightly to Rs 12,624 crore, while expenses climbed to rupees 11,038 crore. This reduced operating profit to rupees 1,585 crore and net profit to rupees 913 crore, resulting in an EPS of rupees 49.90 and a negative 12% year-over-year profit growth. In short, while the top line continues to grow, the latest TTM numbers highlight the need for tighter margin discipline as the company begins its next cycle of high capex investments and energy transition initiatives. For investors who truly understand the language of long-term value creation, sales growth, return on capital employed, and net profit margins reveal far more than a P&L ever could. They tell the story of discipline. Between 2014 and 2024, sales growth at Amara Raja Energy and Mobility Limited has moved in cycles, surging to 52% in 2015, contracting to 0.68% in 2020, and then rebounding sharply with 21.62% in 2022 and 19.48% in 2023, before moderating to 8.37% in 2024. In other words, while the trajectory isn't linear, the company's ability to return to double-digit growth during periods of industry recovery demonstrates a high long-term growth velocity. It is even more telling to look at ROCE, return on capital employed. From a peak of 42% in 2014 and 2015, levels that place it amongst the most efficient capital allocators in India, the number has gradually tapered to 25% in 2024. That decline is not accidental. It reflects the strategic shift toward large-scale capacity building and long-cycle energy investments, where returns manifest with a lag but establish far deeper economic moats. NPM net profit margin tells a similar story. Profitability touched a high of 10.68% in 2014, tightened to 5.88% in 2022 during the peak of raw material inflation, and has since improved to 8.05% in 2024, indicating a restoration of margin power and cost control. Through this entire period, the company has consistently rewarded shareholders with a dividend payout ratio of around 15%, peaking at 29%, while still building rupees 6,750 crores in reserves and expanding total assets to rupees 8,834 crores, a clear proof that value creation and reinvestment sit at the heart of its capital strategy. To truly understand the competitive power of Amara Raja Energy and Mobility Limited, one must look beyond the numbers and examine the structural strengths and vulnerabilities that shape its long-term trajectory. At its core, the company enjoys a commanding position in the lead-acid battery market, supplying to virtually every major original equipment manufacturer, OEM in India, and exporting to more than 50 countries. Its extensive distribution network, supported by over 1 lakh points of sale, gives it a reach few competitors can replicate. Technologically, it has consistently stayed ahead of the curve, from introducing the first VRLA valve-regulated lead-acid batteries in India to investing heavily in R&D and launching advanced energy storage solutions. Financially, the story is equally strong, with revenue and net profit rising steadily and rupees 6,750 crores of reserves now supporting its expansion plans. But this strength also comes with inherent weaknesses. The company remains heavily dependent on lead, a highly regulated and price-sensitive raw material. Environmental compliance issues in the past have already led to temporary plant shutdowns and operational risks, like the fire that destroyed its tubular battery unit, underline the need for stronger risk mitigation strategies. That said, the opportunities now unfolding are transformational. The move into lithium-ion cells, EV electric vehicle batteries, and digital supply chain platforms positions Amara Raja to participate in the fastest growing segments of the global energy economy. Its lead recycling initiatives and backward integration into battery packaging could significantly improve cost efficiency over time, while continued geographical expansion into Europe, North America, and Africa opens new revenue pools. The threats are real, including stringent environmental regulations, growing competition from new energy companies, and geopolitical risks that could impact exports. But these are the very challenges that separate ordinary manufacturers from long-term industry leaders. Thank you for staying till the end. I'm Zayed Haji, and I hope this helped you see the bigger picture behind the numbers. If you found value in this, please like and subscribe. It truly supports our work and allows us to keep delivering research-driven insights.